Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 3rd of February to the 7th of February 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, today we're going to talk about two things in the US dollar index. First, technical, and then we also have to discuss some of the fundamentals and the coronavirus, which is now feeding into the markets. And we need to discuss that in today's video to get a firm understanding of what is going on, generally speaking, across the markets at the moment. In terms of the dollar index, technically first, we did highlight the 98.17 as a target to look for in the dollar index last week. We did take out this target and turned almost to the pip at this key area of resistance we highlighted last week, and we started to sell off quite hard from this area. So going into this week, we are overall looking for further declines down towards the next key area of support here at the 97.11. So any pullback in this area will be viewed as an opportunity to start to look for further declines to the downside, especially if we can come back and retest broken support, turning resistance at the 97.93. This is going to be an area to start to look for the dollar index to roll over once again down towards the next key area of support to the downside and the target set at the 97.11. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 96.39. Now, despite the fact we are looking for a pullback and further declines down towards the 97.11, we also have to understand that technically speaking, between the 98.17 and between the 97.11, we are technically speaking in a range in this area. So our technical overview on the dollar index is for a pullback and a move down towards the 97.11. This gives us a slightly bearish to neutral view. It's not completely bearish, but it is at the moment, especially if it's just starting to turn, it is still bearish to neutral. But the second thing we need to look at as well is the coronavirus, which is starting to feed into the markets. Now, on a fundamental basis, what this means is we are starting to see demand from China fall, or at least, at the very least, at this early stage, we're starting to see an expectancy from traders that demand out of China will fall. And this is having an effect predominantly on the commodity currency. So first and foremost will be Australia because of their close trade links, followed by New Zealand and then also Canada. So when we look at this and we start to see this weakness coming into those commodity currencies as well, it also means that when we start to pair a slightly bearish to neutral dollar against other currency pairs, we really going into this week have to trade these markets on their own merits without a strong bias in the dollar one way or the other. Because even if we are going to see a slight weakening of the dollar next week, or we see a sell-off next week, if the Aussie dollar, if the Kiwi, and if the Canadian dollar is actually weaker than the US dollar, despite the fact the US dollar is weak, we will still see the US dollar appreciating against some of these currencies as we did last week. Although we saw, for example, the pound appreciating against the US dollar, we saw the Aussie dollar declining, we saw the Kiwi declining, and we saw also the US dollar appreciating against the Canadian dollar. And this is because of the expectancy, if not already a lack of demand, the expectancy of a lack of demand or lower demand coming out of China, predominantly affecting these commodity currencies. So we go into next week with a bearish to neutral bias on the dollar index, but because of what's going on with the coronavirus, we actually have to trade the markets on their individual merits without a strong bias one way or the other. So next market that we're going to look at is crude oil. Now, last week we were looking for a decline down towards the target set at the 51.22, and we actually finished the week just taking out that target again, almost to the pip at the 51.22, and we had a little bit of a bounce from this area. Very simply put, going into next week, we're looking for further declines to the downside. This market is structured to the downside, and we're also seeing this sell-off in oil again due to a perceived or expected lack of demand coming out of, or lower demand coming out of China. Oil as a commodity, as well as copper, you see this in copper as well, it's a barometer, generally speaking, considered barometer of the health of the global economy, and this is why we're seeing a decline as well in the price of oil. So very simply put, going into next week, and of course this will also affect the Canadian dollar, going into next week we are looking for declines to the downside. Any pullback in this area, and preferably if we can come back and retest broken support, turning resistance at the 53.85. This would be the best place next week to start to look for short opportunities. And if we get a pullback and we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 50.48. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 49.11. So the next market we're going to look at is euro dollar. Now we start the week having bounced from a key area of support at the 1.10280. So very simply put, going into next week, we would like to see if we can get a pullback. And of course, we only have a slightly bearish to neutral outlook on the US dollar. So if we can get a pullback in this area, preferably if we can come back and retest broken resistance, turning support at the 1.10280. Any pullback in this area would be a great opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.1172. And if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance, the upside and target 2 at the 1.1249. So the next market we're going to look at is pound dollar. Now last week we highlighted the key area of support at the 1.30130 for you guys to keep an eye out and to look for a bounce or a rally from this area. We did get this pullback and we did end up bouncing from the 1.30130, which we highlighted last week. So very simply put, we're making our way now to the target highlighted last week at the 1.3320. For anybody not involved from last week, what we'd like to see is any pullback in this area. Preferably, as always, if we come back and retest it once more, as we always get better risk to reward on the setups the deeper the pullback. But any pullback in this area is going to give us an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.3320. So the next market we're going to look at is US dollar Japanese yen. Now we start the week below a key area of broken support, already turning resistance once at the 109.130. We are overall looking further declines in this market next week. If we can get a pullback, and as always, if we can come back and retest broken support, turning resistance once more, this would be preferable as we could get better risk reward on the setups. But any pullback in this area is going to give us an opportunity to start to look for bearish setups. And if we get those bearish setups in this market, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 107.65. So the next market that we're going to look at is Aussie dollar. Now we come to the first commodity currency here. You can see what I was talking about at the start of the video, especially the Australian dollar, with Australia having the closest trade links with China out of all of the commodity currencies. Even though we've seen a weaker dollar towards the end of last week, we did not see any bounce in the Aussie dollar. In fact, we still started to trade to the downside because on a relative basis, even with a weaker US dollar, what's going on with the coronavirus and a perceived lack of demand or anticipated lack of demand in China, we're seeing weakness coming into these commodity currencies. So this is why we really cannot trade the markets this week on a straightforward basis of the dollar is weak, the dollar is strong, so therefore X, Y, and Z. We have to actually trade these markets on their own merits. So very simply put, going into next week, if we can get a pullback in the Aussie dollar, and any pullback, and as always, preferably if we can come back and retest broken support, turning resistance, any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.6604. So the next market we're going to look at is New Zealand dollar. Now, similar to the Aussie, in fact, the Kiwi after the Australian dollar is probably the second most exposed currency to the Chinese economy. And again, as we saw that sell-off last week in the dollar index, we did not see any inverse bounce to the upside in the New Zealand dollar. So on a relative basis, there is no money coming into the New Zealand dollar and the Aussie, even if it is coming out of the US dollar. So very simply put, going into next week, we're coming very close now to the target set at the 6439, so we really want to see a pullback in order to get good risk to reward. Any pullback in this market, preferably as always if we can come back and retest broken support from the past, turning resistance at 0.6580. Any pullback in this market is going to be viewed as an opportunity to look for bearish setups, and we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, 0.6439, and if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.6320. So the next market we're going to look at is US dollar Swiss franc. Now we start the week below a key area of broken support from the past, looking to turn resistance at 0.97280. Any pullback in this area, and preferably if we can come back and retest broken support, turning resistance, this would be a great place next week to start to look for those bearish setups. And we're going to be looking at initiating shorts if we can get those bearish setups in this market down towards the next key area of support to the downside and the target set, the 0.9584. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2, the 0.9528. So the next market we're going to look at is US dollar CAD. Now we start the week above a key area of broken resistance from the past, looking to turn support at the 1.31710. We highlighted the 1.3270 as a target to look for last week, and we started the week here and we came all the way up very close to it, haven't achieved it just yet. So very simply put, going into this week, if we do get a pullback and if we can test broken resistance turning support at the 1.31710, this is an area we can start to look for bullish setups. And we would be looking at initiating longs up towards the target set from last week in the next key area of resistance to the upside at the 1.3270. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 1.3327. And last but not least, we have gold. Now, we have been slightly choppy in gold. However, we are still making our way to the upside. We are still structured to the upside. And if we do get some weakness coming into the dollar index next week, this is likely to help push gold to the upside. So very simply put, going into next week, if we can get a pullback, and preferably if we can come back and retest broken resistance, turning support at the 1574.99, this would be a great area next week to start to look for potential bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1616.70. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who comments on the channel, and a big thank you to everyone who has subscribed to the channel so far as well. I want to wish you all a fantastic weekend, and I want to wish you all the best for your trading next week. The only thing left for me to say, guys, is take care and don't forget to trade safely.